Mr. Sanjeev Goenka, who's the Vice Chairman at CESC. He's live with us right now from Kolkata. Mr. Goenka, thanks very much for joining in. This is Bianca.
Hi.
You know, after that stake buy in First Source, the street has been worried about the company parking cash in an unrelated sort of business. Do enlighten us how and why you saw opportunity within First Source and why you want a foothold in the information technology space.
Well, I think the first thing I'd like to state is that CESC has been and will continue to be focused on power. There will be no investment in sectors other than power at the cost of power investments. First point. Second point, because of the current environment, whether it is to do with land, whether it is to do with the Environment Ministry, whether it is to do with the fuel linkages, projects which have been under development are taking much longer to get to financial closure. So you have a situation where for the immediate term, which is the next 12 to 18 months, you will have strong cash flows coming in and no matching outflows in terms of investments because these projects have taken slightly longer to get to financial closure. So with that in mind, we had actually engaged McKinsey to help us strategize a path forward. And McKinsey said, you should get into something that's complementary to power. In as much as power is capital intensive, get into an industry that's non-capital intensive. Power is government regulated, get into an industry that's non-government regulated. Power is local, get into an industry that's international. And get into an industry that's sunrise. So BPO fitted in with this. They recommended BPO. We went ahead with this acquisition. And it is just 4 to 5 months cash flow that's gone into this. And we really have about 18 months mismatch in terms of flows coming in and capex going out. So this was the rationale. It's a profit-making company. It's a company that has great potential. And therefore, it's not something that's going to be a cash guzzler. It's a one-time investment with no further investment going in.
Okay, good to have that clarity and point noted, Mr. Goenka. Do you expect good response to the open offer?
Well, I think if we get a good response, my holding will go up and I'll be happy with that. But given that the current market price is pretty much the same, I'm not sure. You people are in the markets, you all would have a better sense.
Okay, all right. In fact, you know, you've earlier also said, and you said that just now as well, that the group is not really finding too many avenues to grow in the power space. So what exactly is going to be your primary strategy from here on?
You know, I think we are going to look aggressively for power growth opportunities, but they are going to be for viable power opportunities. So we are looking at avenues in the field of generation, in the field of distribution. We will not bid for any and every project. We will bid for those projects that we believe will be profitable. And profitable power projects at this current point in time are somewhat limited. Though we do believe, I must confess, that we will see some M&A opportunities emerge in the next 12 to 18 months.
That's great. And you are not going to be telling us more about that, will you? Any hint as to what you're looking at?
A bit premature, but yes, we are going to look at distribution franchises aggressively in some states, not in all states. And hopefully, very soon, we'll have some good news to share with you on the distribution front as well.
Okay, so we'll touch base with you very shortly once again when you are able to share any of those details, Mr. Goenka. Coming to your power projects, which are, you know, you've said earlier that they are facing extraordinary delays because of difficulties in acquiring land, in sourcing coal linkages. So what's the fuel supply situation as of now, and your projects in West Bengal, are they on track for commission?
Well, both our projects in Maharashtra and West Bengal are absolutely bang on schedule. They're absolutely on target for commissioning. And we now have some clarity on the fuel based on the latest directives of the PMO and the coal ministry. And now we are told that even a medium-term PPA would qualify for supply under the FSA. And that actually eases up the situation a significant deal. And we would now start negotiating for medium-term PPAs.
All right. I'd like to just briefly talk about the retail space. Spencer's, it could need around 400 crore rupees over the next 2 years to fund operating losses and to repay debt. That according to reports, what we're picking up. But do tell us if that's right. Also, when are you expecting this space to break even? And particularly with the FDI changes now, what is the road ahead for Spencer?
Well, frankly, I think Spencer's should get to a company level EBITDA positive in the next 4 quarters. That's the first point. The first 6 months of this year, we've had a turnover of 714 crores compared to 560 last year. Same store sales growth has been 16% compared to an industry average of about 5 to 6%. We are doing, at a store level, we'd make 50 rupees a square foot profit. We need roughly about 90 rupees to start breaking even. I think we are getting there very fast. Actions are in place. Month on month, we are seeing an improvement. And I'm pretty confident we should get there sooner rather than later. And with that that end in mind, we are actually initiating the process for making Spencer's an independently listed company. Very shortly, we will appoint advisors to help us strategize the whole process of listing it independently.
Okay, sir, thanks very much for talking to us and giving us all those details. We will touch base with you once again very soon. Hopefully, you'd be able to share with us plans on the M&A front and on Spencer's retail as well. Briefly, that you touched upon retail, the Spencer's retail part. Thanks very much. CESC stock right now trading at the day's highest level, and it has moved up since the time we started speaking to Mr. Goenka.